Hey guys, and welcome back. In this video I am going to be explaining my investment plan for 2025, and yeah, let's get into it. So we'll start off with the SIP. Actually, now the SIP I'm not planning to do with anything this year. It's currently sat at 6,500. I'm not really planning to do anything with the SIP for a while, but I will go ahead and have a look over here and show you what this looks like. So you can see the total cost is £5,804.73, and the current value is 6502.49 with a change and a gain of £697.76. This is how the investments break down. I've got a target retirement 2055 fund, which is about 25%. I've got the FTSE All World, which is about 36%, and the S&P 500 at around 38%. So as dividends do come in, because unfortunately I did roll this over from a couple of years ago, and I accidentally bought the distributing versions of these funds. So when this is a SIP, it's probably better to just have accumulation. But what I'm going to do is every time a dividend comes in, I'll let it stack up for like £100 or something and just put it back in. So that is the Vanguard account. Now I've moved completely away from Vanguard. I don't really want to touch it just because the fees are just insane. So I'm going to be sticking with Trading 212. Now, if you've seen some of my old videos, you'll know that I used to have around 64K in the ISA. I did go ahead and withdraw that to an investment in a new business. But we're back investing back into the stock market now. I've had a nice day around a £40 gain. So how am I looking to invest? Well, you can see I've got £9,700 in cash at the moment. So how I'm going to plan to invest that is, to be honest, the majority of it is going to go in my long-term growth pie, which in here is two holdings: the FTSE All World and the FTSE and the S&P 500. Now the S&P 500 I've done okay on. I'm up currently 6.78%. I purchased at around, my average cost is £79.95. Now with everything going on at the moment with the war, to be honest, this has actually done really well over the past sort of couple of weeks. I was expecting us to absolutely tank, but apparently not. Even in the All World, you wouldn't even know that the stuff that's going on right now is going on, which is insane. So currently only have £5,000 in here. Now I am gonna actually do another DCA of 150 into this today. So the reason it's only going to be buying the FTSE All World is because you can see it is massively underweighted. And the reason it's massively underweighted is because I purchased a lot of the S&P 500 outside of a pie. I've moved it in. That's why it's underweighted. So we're going to go ahead and purchase another £150 worth of the FTSE All World just to get that balance back up. So how I'm looking to invest this cash is two ways. Okay, I want to have dividends and I want to have long-term growth. Now, I know a lot of people, I'm only 23, so I know a lot of people say that, focus on growth, and I completely get that. I'm pretty heavily invested into Bitcoin as well for long-term growth. I have growth assets, don't worry. But I'm also looking to have some monthly yield. Now, at the moment, I currently have about £1,000 in this high yield portfolio, which is Income Shares funds. Now, Income Shares are releasing new funds, I believe, in a few days. Time of recording this is the 24th of June. I believe they're releasing new funds on the 27th and changing their strategy slightly. So this may be interesting for this pie, and I may put some more in here. Now, I do have this monthly income fund, and shout out to Cashflow King, who I took some inspiration for this pie. But I've got JP Morgan Global Equity Premium Income, JP Morgan Global Growth and Income, JP Morgan Nasdaq Equity Premium Income Active, US Equity Premium Income, Main Street Capital Realty Income, AT&T, Oxford Lane, and Income Shares Golden Yield in here as well. Now, if we take a look at some of these ETFs, you can see that over the past sort of 3 months, JEPG is down. If we take a look, JGGI is down over the past 3 months. GEQP is down. We've got JEIP is down. Main Street Capital is up. AT&T is up. Oxford Lane Capital is down slightly. Now, Oxford Lane Capital's dividend is really high at 26.93%. Some people may think that's a dividend trap. It has performed okay. I mean, it did go up to crazy all-time highs at some point. So the last month it is down pretty heavily. So it could be a good time to purchase this with that insane yield. And then we also have income shares, which has golden yield, which has only gone up. The dividend yield is pretty low on this though. So this is one pie that I'm potentially going to be investing in. I do have monthly individuals, which are AT&T, Main Street Capital, and Realty Income. Main Street Capital has a solid yield of 7.2% as well, and these are monthly income payers. Another interesting thing though is YieldMax has released in the UK through Han ETF. So we can now go ahead and buy MSTY, which I will do a complete separate video on this. But yeah, you can now buy MSTY in the UK, which is very, very interesting and something that I'm definitely interested in doing. I love Bitcoin. I like what MicroStrategy is doing. And MSTR is, MSTY, sorry, is something that we haven't had in the UK that people have been waiting for. So I do definitely think I'm going to put some money into this and see how that does go. So that is my investment plan for this year. To be honest, I think I want to keep it 60-40, 60% in long-term growth and 40% in income. So let's say if I manage to put, I don't know, 20 grand into this year's ISA. Okay, let's say I managed to max out this year's ISA here. Now I'm back investing in the stock market and 40% of that is into income. 8 grand a year is going into income. Let's say on average, with the high income funds, we're getting, 20% yield being conservative. That means we're going to start to make 1,600 a year in dividends. And if we divide that by 12, to around £133 a month in dividends. Now, I'm already making more than that on this. You can see that my distributions have been to £378. So yeah, you can see the distributions have been pretty high on these things. I mean, I get, around £60 a month roughly just on this. I do want to boost this high yield up. I want to boost this up to around, I'd ideally like to get this to a few K, about 5K. Now, obviously, I don't really want to do that with the amount of money I have now because, the majority of this is going to go into the high growth so I can sleep well at night. The high yield stuff, I do like it, but I mean, you can have massive swings and it's not looking good in terms of the NAV performance. Obviously, total returns is completely different, and that's the thing you have to focus on with these funds is the total return. But I don't like seeing this NAV go down. But I mean, it depends what you're investing for, right? Some people have a high allocation towards these high yielding stuff, and then they dollar cost average those earnings into something like a long-term growth portfolio. That is something that you can do as well. So that's something that I may look into. But yep, I may go ahead and take away one of these and add in my the YieldMax funds, but I may just have that as a sole thing. There's two now, and I'll do a complete separate video on this, but there are two funds you can buy. There is MSTR and Big Tech. Don't worry about the reason there's like 1, 2, 3, 4, 5, 6 is because they're all on different exchanges. But you've got YMAG as well as you got YMAG, which is up 54% so far, which is pretty insane. 21%, and then you've also got MSTR, which again is up slightly. It's basically a break even. But this only did release a few days ago, so I'm keeping an eye on this. But yep, that is going to be it for the video. That is my investment plan for the rest of this year. 60-40, 60% growth, 40% income. Let me know what you think. And over the past month, we've done okay. We're up to £251.66p or 1.6%. So, yeah, that is going to be it. But thank you for watching. I hope you enjoyed, and I'll see you on the next one. Peace.